Hello, everyone. So today we have the honor to present John Mullin, CEO of Mantra. Huge clap, please. Julian Kwan, CEO of IXSwap, and Stephen Richardson, VP of Product Strategy at Fireblocks. Welcome, everyone. How are you guys? Julian, maybe start with you asking, because maybe the public is not sure, what do we mean when we say tokenized real-world assets?
Yeah, so the term RWA is fairly new. It started predominantly about 6 years ago as the security token market. There are different types of real-world asset tokens. A lot of them are securities, but now I guess the definition encompasses the financial instruments like the tokenized money market funds, shares of real estate funds, shares of startups. There are a subset of real-world asset tokens that aren't securities. We're seeing people tokenize things like whiskey barrels and I guess commodity tokens. So it's a very broad subset of sort of different assets that fall under it, but a lot of them are fall in the securities bucket, like equities, and there's also a lot of debt tokens as well.
So shouldn't we rename it from RWA to something a little bit better?
Yeah, we need a new term.
It's a new name.
Need a sixth
RWA
name.
is
It's old.
yeah. In the TradFi side, it's risk-weighted assets, and it just doesn't really work.
So let's say you have your token as real world asset, but then can you trade them among themselves?
Yeah, I think there's a lot of different ways people are trying to get these off the ground. If they are securities, they're meant to be traded on platforms like IXSwap that has securities licenses and has the technology. So yeah, I think it's a growing infrastructure. Again, it started 6 years ago, so there's been broker-dealers and exchanges and custodians working on this for quite some time. It's just in the last year or two we've seen this explosion of tokenized treasuries, money market funds, all on chain as well, so you can see the real growth. And then that's why the crypto industry kind of adopted this asset class in the last year or two, which is where we've got the RWA name from, where it started with security tokens and somehow got rebranded RWA, which some of the guys in TradFi don't like. And now, that's where we're at today.
It helps when Larry Fink is shilling tokenization on CNBC every once in a while as well.
And on public chain.
And on public blockchains, that's right.
John, which industries have already embraced tokenization?
So as Julian was mentioning, you can really tokenize just about anything. We're seeing a lot of traction in a number of different sectors. So at Mantra's focus, which we're an agnostic provider or partner in the RWA space as a layer one blockchain solution, so we can really tokenize anything. The three areas that we're seeing the most kind of traction and pickup would be real estate, like kind of financial products, so fund tokenization, money markets, private credit, private equity, et cetera. And I think another one that's quite interesting is IP. Story Protocol, Korean project, Korean-US project, has come out and been fairly popular recently. And they're looking at IP as an asset to bring on chain. So these are the three that we're seeing a lot in terms of real estate. We're primarily focused between the Middle East and Asia. So we're seeing a lot of traction in the UAE. In Dubai particularly, it's a very hot real estate market. And there's a lot of institutional adoption there at the developer level, at the sovereign government level. And we're happy to play a part of that. So I think initially I thought real estate was kind of a boring asset to tokenize, but seeing the pickup that it's having right now, obviously the size is massive. Literally trillions of dollars of assets can be brought on chain. So I think that's kind of where we're seeing it. We announced a large deal about a month and a half ago for $500 million to tokenize off-plan development in the UAE, in Dubai. And that's like the tip of the iceberg. It's one of the smaller ones we're looking at right now. That's still a lot of money.
Great, thanks. Stephen, is there opportunity for partnerships between traditional finance and crypto with tokenized real-world assets?
Yeah, so I think obviously as a launch point for these assets is a question of where they're going to go, right? And I think at least for me what's been interesting is looking at like tokenization of things like money market funds and where we're seeing a combination of kind of that basis, right? So I think folks are looking at it from a yield basis, and obviously they're like yield-bearing stablecoins and things like that, but we're starting to see this idea of using these tokenized funds as like collateral for trading on exchanges, right? So I think until you have like the broader infrastructure that would allow either retail or institutional investors to hold in a wallet infrastructure level or to do something with those assets in a real way and to kind of continue to generate some return on those assets, this idea of leveraging the crypto native ecosystem is something that we think is really interesting because it's a question of where do these assets get distributed and to whom, and then how will they utilize them in the same ways that they utilize them in the traditional space, right? So what does it mean for potentially like the development of things like repo markets that would come on chain with these tokenized assets and other things? So I think that's a really strong launching point for kind of where these assets are going and the type of assets that are going to be tokenized, and whether or not we can get them into the hands of folks that are trading to be used as things like collateral or other kind of yield-bearing basis. I think that becomes a pretty interesting thing to explore.
Okay, and what are the main regulatory challenges you're facing when dealing with tokenized real-world assets?
Look, at least for me, the benefit of tokenized real-world assets is this idea that there's like this very large basis for distribution and then for fractionalization, right? The problem that you have is that compared to like the crypto native space with ICOs, right, where something was tokenized and then distributed through like centralized exchanges or through kind of like the broader investment community, and we didn't so much care about like the broader regulation behind them, this idea of tokenized assets still sit in a very geo-specific place, right? So depending on where you issue those assets, there's the regulation around them, and then kind of it defeats the purpose of it being on-chain from a broader distribution perspective because you have to have things like accredited investors and other things that kind of limit the scope. At least for me, this idea of things like on-chain identity coming into play become a very interesting thing to explore because if you can actually bring identity on-chain, either from an institutional level or even potentially from a retail level, then you expand the idea of distribution behind these real-world assets in a closer to real-time way and allow people to then identify themselves as being able to partake in the kind of the distribution basis of the assets and then kind of how they get moved from one point to another. I still think that's relatively early, but I think if that challenge is solved and then in my mind some level of like coordination from a regulatory perspective in terms of how these on-chain assets would be treated, right, and some kind of like harmonization there, I think then like this idea of real-world assets on chains becomes a pretty interesting thing to start to think about. I think we're still early, but like it's happening at a local level, which I think is interesting as we talk with regulators globally. They're thinking about that as well.
I mean, one of the things with licensing and regulation, to Stephen's point, is like it is super localized and every market is different, right? So we kind of take a view. We're in the process of getting licensed in the UAE and Dubai under VARA, but even in the UAE, there's multiple regulators, which is kind of crazy. But you have to take a bit of a view on like when you're distributing assets, real-world assets, which countries are the absolute no-goes and which ones are the ones like, okay, maybe this is a gray area and we're just going to maybe ask for forgiveness later rather than permission today. So that is definitely a viewpoint of how you have to look at things. And in the end of the day, the issuer is going to have to take responsibility and make sure that they're comfortable with whatever risk that they're going to take in terms of how they're distributing the type of asset that they're trying to issue. And obviously, you know, as Julian was mentioning, like some of these things are, you know, borderline security, maybe not. Some of them are definitely securities. And there's no clear consensus globally, which makes it a challenge. So like you kind of have to go asset class by asset class, jurisdiction by jurisdiction if you're going to issue these things and distribute them. And obviously that's a challenge. And then even more so for the trading side of things. So like I kind of see RWAs in three phases. Today is, you know, supply side, so bringing on high quality assets on chain. Tomorrow will be making sure there's actually deep liquid markets that these things can be actively traded, you know, globally. And then the third piece, to Stephen's point, is more about this composability. So how do you actually use them? Can they be used in DeFi? Can they be used as margin and collateral? Can they be, you know, interacting cross-chain, cross-jurisdiction? So that's kind of one of the unique challenges of RWAs as compared to just pure crypto. And this like idea about how do we actually bring the market to people who maybe are looking for different types of assets, right? Like native on-chain users are, you know, looking at meme coins and, you know, 100x opportunities, maybe not necessarily a 5% BlackRock money market fund.
Julian, which opportunities you see for the industry in the near future?
Yeah, I think we used to say years ago that the RWA industry would really help crypto grow because it's a real use case. 3 of the 5 biggest cryptos, you know, US dollar stable coins. So a couple of the challenges, so that's a key point. And I think that the real opportunities are in the private markets. You know, you have BlackRock and Franklin Templeton. They're tokenizing, you know, publicly traded assets and treasuries, which is great. It's a key asset for the whole ecosystem. But what's really interesting now is there's a split at the moment between people who are actually buying real-world asset equity tokens, which is usually the accredited investors, the bigger investors, crypto hedge funds, et cetera, and then the actual crypto community and degens who are buying the utility tokens of the RWA platforms. We have one, you guys have one. IXS tokens, the native utility token of the IXSwap platform. It itself is not a real-world asset equity token, it's a crypto. So a larger percent of the crypto industry thinks that the real-world asset tokens is subset as an industry are these utility tokens. So it's an interesting situation. And so what the opportunities that we see is, and pointed out for a few points, is you need to be able to get these into the hands of everyone and as easy as cryptocurrency. And that's one thing that we've spent 3.5 years doing is getting a retail securities license. So you can buy an equity token on IXSwap with $1 USDT with a photo ID. And there are jurisdictional issues thinking about issuing assets, but like what we do is we leverage regulation, but it's global product for global investors. So a lot of the key issues that have been around for many years are being solved one by one by us and other people. We actually use Fireblocks tech on the custody side. And then the other thing that we've built is the first way to actually create liquidity pools. So if you think about cryptocurrency in 2017-18, if you had a lot of money and you're a big coin, you could pay Binance and Coinbase to list on the centralized crypto exchange with market makers and life was great. 10,000 altcoins had nothing. So along came the development of the automated market maker model, which is essentially smart contract driven, crowdsourced market making for any two tokens. We decided that in the real world asset space, we believe everything will be tokenized. It's a better system. All the regulators will want this. Every share, every company will be a token format. Then the supermajority of these want trading, and there's going to be way too many. There's going to be way more RWA than cryptocurrencies. They're all going to want some tradability. So we'll see if we can build a system like Uniswap, but we'll go get all the licenses. So it's a legal way to create a pool and trade for real-world asset tokens. So there's, and the opportunity for that is that you can start a company and tokenize $5,000 of equity, and you can start a liquidity pool. That's at least one of the major opportunities that we're bringing to market, but we think is really exciting for all the industry.
Steven?
Yeah, I mean, I think for us, like that's part of like the interesting basis, right? Because you have this idea of enabling folks to be able to access liquidity and deploy tokens in a way that makes sense. But I think when we're looking at folks like what Securitized did with BlackRock and what the asset managers are doing, I think they're looking at real-world tokenization as a way to streamline and like optimize on a cost basis and increase the potential of direct distribution, right? Because at the end of the day, today there's inherent costs in the development of these different funds off-chain, right? And there's a question of whether or not you can break apart the value chain and work with different both exchanges or distribution partners or transfer agents at a distributed level to kind of really cut out the cost and then in some ways bypass what you're doing potentially at a banking level, right? Like if you look at what BlackRock did, they didn't use a bank, right? They used Securitized that had their ability to be able to deploy and execute on a transfer basis. And so when we're talking to asset managers and folks that actually own these assets, there's a quick question of, okay, can we cut out costs, number one? And then how do we think about like an evolved level of distribution? Because one would look at what's happened in the ICO phase and say, crap, like they were able to distribute assets and deploy them in really significant sums if there was value behind the asset that was being brought on the chain, right? And so imagine a world in which a Robinhood or a Revolut or a Grab has the ability to have some level of a securities license or an ability to distribute, and there's on-chain identity. What does that do to expand the basis of these different funds that are being brought onto the blockchain? And then on a secondary point, how are then secondary liquidity venues created that allow a really easy UX UI model for retail to be able to get into that, right? And so I think that's the potential of what we're looking at, both from like the largest funds in the world to the folks that are like starting up that need to kind of get capital, right? And think about like real estate projects and all of these other things. So I think that kind of value chain model is still being developed, but it's happening in a much more rapid way over the last year, at least in what we're seeing, and that's pretty exciting for this kind of asset class that's being generated.
And how are your companies actually working with tokenized real-world assets? Maybe John, you would like to give us a...
Well, so we're basically building a layer 1 blockchain. So anyone, a tokenization platform, an app like IXSwap could potentially, build on Mantra. Our mainnet's coming soon. I said before the U.S. election, so you can kind of infer when that's happening. Again, we are it's almost like a B2B model, right? So we're working with app developers, both on the Web3 native side as well as the Web2 side or TradFi side, to have different products that you can actually either bring on-chain, trade on-chain, interact with on-chain, et cetera. And at the same time, we're also going through a licensing process in the UAE to have an on-chain exchange product that allows for trading of these RWAs. That could also be, another liquidity venue that could potentially have IXSwap tokens, trade on it in the UAE context. We need more venues like this that have licensing in a local jurisdiction because there's just not that many of them. I mean, literally, I think you guys might be the only ones. So you need more venues like that where you can have almost this ability to have maybe not a completely permissionless issuance, but a semi-permissionless model where at least you have some idea about who is behind the product, who is the creator of the token, what is it backed by, what are the general details, rather than the ability to just launch any token on pump.fun and then get rugged instantly.
Yeah. So issuing most of these real-world asset security tokens require a similar process issuing any security. Now you've got to find also the technology stack. So the history's been littered with people doing one thing. And when you had to find a broker-dealer or exchange custodian and a tech issuance, token issuance platform, protocols, it was all separated. It was way too hard, and that's why it was one of the biggest issues for the industry. So we stuck it all together. So you just push a button, come to IXSwap, we got licenses, tech, and wallets, and payment systems, and secondary trading, and make it very, very easy for everyone. And that's been a mission that we've been on for many years, continue on. The other thing that I want to say about the opportunity, I missed this thought process, very important. So one of the other major challenges of the industry up until recently was just, call it traditional finance people trying to tokenize an existing asset just for the sake of it. No change, no differential, maybe even on a private chain, which no one cares about. And there wasn't really changing the game. The actual real excitement and the real opportunity, if you're thinking about real-world asset tokens, is to build towards the DeFi space, right? We're not here to try and build stuff and sell to BlackRock, right? BlackRock sells its own stuff to its own people, and it's a walled garden, and that's how they operate, and they're not going to change, and none of the banks are going to change. The real excitement is building towards Coinbase, Bybit, Binance, the DeFi protocols. Hundreds of millions of users already on chain. Actually, 2021, Bitfinex, FTX, Binance, they started launching tokenized stocks illegally, no license, pull them down. Interesting, tokenized stocks, most people in the room probably can buy them, but actually if you're emerging market, you can't. So it's hundreds of millions of people target market. They did it the wrong way. Now it's round two. Coinbase is building an RWA exchange in Abu Dhabi. Groups like ours have all got the licenses. So the real exciting opportunity is not to try and build something and sell it to a bank who doesn't care. Is to build it to all the guys who don't have the assets, they don't have the licenses, but they're already in the space. And that's the DeFi. That's the DeFi side of the whole industry.
Steven, how is Fireblocks working with RYA tokens?
Yeah, look, I think as a technology provider, our view is to be relatively agnostic. Like we do have views that I probably say are pretty similar to Julian's, but like I think for us, we provide everything from the custody to technology that sits behind people that are developing wallets. Like we think UX UI is really important. It's somewhat complicated for people to engage with blockchain today. So people that offer a full stack and make it easy for someone to onboard, that's what we want to support, and hopefully they're using our wallets to do that. We have a tokenization engine that manages things for folks that are tokenizing assets and managing smart contracts. We have a team that develops smart contracts as well, right? So our view is to be kind of the background infrastructure. We're not on the forefront of what's happening, but we're hoping to power people that are coming up with the concepts and ideas that we think make a lot of sense. To Julian's point, I do think, like, at the end of the day, like what Coinbase and OKX and others have done is they've created a very easy UX UI for people to engage in crypto, right? And so that access point and accessibility point is like very fundamentally important. I think the people that are also key to watch for me are like the fintechs, right? And e-commerce platforms and what they're trying to do. I think they have very ambitious plans in the real world tokenization space. And they're not bound to the same constraints as banks are, and I think are a little forward thinking. So I think this combination will be quite interesting to watch probably in the next like 18, 24 months, at least from what we're seeing, in terms of, you know, what they feel is like an open marketplace concept for them to go after.
Great. Well, thank you very much. The session has ended, and I guess so. Tokenization, real-world assets, it's not something from the future, right? Well, we're early, but it's something from the present. Thank you very much.
Thank you to our panel for that engaging discussion.